Back to the point you made on equity, rolling the equity and structuring
Yeah,
these deals. Why don't you use debt instead of partly cash, or is that more
risk,
efficient?
risk. Why did we raise 113 million in July? Because we didn't need the money immediately, but I just felt that it was too risky to take on debt. But there was another reason as well. We wanted a bit more flexibility because in merger negotiations, it's good to have the money in the bank so that you don't have to go to shareholders, and you can do deals quickly and effectively. Because if you look at our competition, I mean, the holding companies are not in the market at all. I mean, they're talking like WPP and others about getting into the market, but we'll see. We'll see what they actually end up doing. And I think selling companies, you don't want people who want to sell companies and do earnouts. You want people who are going to commit to the mission. And there is a missionary zeal here. I mean, we want to build that new model, and we want to aggressively take down the existing models.
Got to tap into the emotional side, or
yeah, well, there's a sort of a passion to this that is extremely important. So that's very, very important.
It's important to have a villain, though, right?
Well, no, but important to have a target. Yes, that's for sure.
But in terms of my question was more around also how much leverage could these businesses take, because it's so cash.
Well, they can take about I would say in comfort 2 times leverage. The private equity companies. I mean, in our area, there are a lot of private equity companies. In fact, on deals. I mean, on the client side, it's Accenture. I mean, that's the competition for us. They were the competition on BMW, the competition on Mondelez. So we're sort of 2-0. Victor Knapp likes to say I think we're about 4 or 5-0 up according to him. But on the big stuff, it's sort of been 2-0. But they compete with us on the client side and compete with us on the deal side, and then PE on the deal side for private equity, because they have more money than Croesus. They've got about probably $1 trillion of unleveraged equity. There's probably they could leverage that 3 or 4 or 5 times. So you are talking about huge resources, and they are very aggressive. I was speaking to one of them yesterday, and it just raised a new fund, and he said, we've done extremely well this year given COVID. We've raised new money. It's not proving easy to deploy the money, and the pricing has gone up. So private equity and Accenture on the deal side. Now for debt, I think you probably can go to 2 times. I think private equity goes more than that, but I wouldn't feel comfortable with. We've said to the market we would leverage up S4 by 1.5 to 2. We probably have a couple of £100 million of debt capacity if we wanted to push it. But all the advice, and my closest financial advisor said to me when we were contemplating the equity issue, go for it. So we went for 75 million, and we upsized to just under 115 million.
On the pricing, due to this private equity and competition coming in, do you expect these assets to really increase in price because of the cheap money and competition? Even though it seems like
I think it is. I mean, we're seeing a lot of activity in the US because they were worried about before the year end, because they were worried about capital gains tax increases under the Biden regime. I actually think probably that's probably being. I don't think 2021 will see that, but we'll see. But if you wanted to avoid the risk, so there's a rush to complete stuff before the year end. So we are seeing a bit of frenetic activity, but with zero interest rates, people want to deploy capital. Somebody said to me yesterday about SPACs. It's a good place if you're not getting any money, any interest on money. You park it in a SPAC, and you effectively have a warrant on the upside.